So the way I own property is through what's called real estate investment trusts. And of course, if you get the wrong one, you could come a cropper because there are some REITs which did get into trouble recently because they owned a lot of commercial real estate, specifically office blocks. And as we all know, there were an awful lot of people working from home. There were empty floors, lots of spare desks, and as leases came to maturity, quite a few companies said, well, we used to have 3 floors, now we only need 1 floor. And also, we'd like to negotiate the rent on that floor downwards because you've got an empty building and we can negotiate it downwards. So landlords were suffering from lower rents and lower occupancy rates, and then those REITs were going down in value. And if they had a lot of leverage, in some cases, the value of the property fell below the amount they'd borrowed, which obviously is a problem because the bank is then going to call in the loans and you're forced into selling the properties, probably in a market which doesn't want to buy them, and at a big loss. So my point is be careful when you buy REITs. You want to buy REITs and come in which own the kind of properties which you think will still be there 10, 20, 30 years from now and still occupied, and probably ones which are not too leveraged, which don't have too much borrowings. But there's a huge choice out there, but that's the way to do property. For me, I think real estate investment trusts, you get a nice yield. In many countries, the real estate investment trusts also have tax breaks for the domestic investors. It's worth having a look into that and seeing what the tax break is where you live.